take a look at what's happening. What is up, everyone? Let's take a look at what's happening. All right. So risk is catching a bid as expected. Let me actually position it here. All right. So this is the dollar index. Obviously, we took out the neckline. We've did a pullback, and we've sold off from there. Last night, when I was making a video for everyone, I was basically saying watch for the break of this trend line. We broke it overnight. Not even overnight. We broke it at the open, and we've been going ever since, going down ever since. Now, now we've taken out this critical support, and they tried to rally. We retested it essentially, and then rolled over again. I took profit on the euro dollar here on this spike up at 85, and I rebought it again at 65. So I'm long again, or 55, 65, I don't remember. 55, I think. Yeah, 55. Yeah, I bought it at 55 in our signals channel. And obviously same trend line break was visible here. So options are pricing in right now a euro basically rallying somewhere between 109 and 1010. So which is this resistance here, which is quite doable. So I think we definitely have another 100-point run in the cards. Tomorrow is Powell is speaking tomorrow, so he might say something which might work counter to risk catching a bid. But for now, as you can see, all the indices, except NASDAQ, tech heavy, but the Dow Jones, for example, it took out this resistance here, and I think we're gonna expect to see 32. That's my target, 32. And then we'll see what happens afterwards. So this 55, the 618, all comes around that level. And that's what I'm looking at. Let me actually make this proper. There we go. So, yeah, almost 32. I think we can definitely tap the 55, the 618 by tomorrow before Powell speaks. And when Powell speaks, depending on what he says, even though I don't think he can... he's not going to say anything new, but I think he'll reiterate the hawkish stance that he's been doing every week pretty much. So this is another thing to watch here. Actually, so maybe we can even get to this. Actually, you know what? Let's not get ahead of ourselves. Make it this way. So I think bumping into this trend line here is in the cards. After that, we'll see. So kind of like this pullback here. I explained why I was expecting to rally because of this Friday close, and we did rally. I positioned a lot of traders in our signals to be long. So we're long NAS, S&P, US 30, US 30. And all of them are in profit. So we've also made nicely on the New Zealand. I was long somewhere from here. I took profit around, I think, somewhere here in the beginning of U.S. session. I'm expecting a little bit of a pullback. I don't think we're going to see this level here. Where is this? I don't expect to see a price action go down all the way here and bounce, but maybe we can bounce somewhere. Maybe something a little shallower, somewhere around here, and then go back up. So, but definitely, whenever this little retracement is over, we're going to have some kind of trend line. Once it breaks the trend line, I'm going to re-enter the long and target upside. Because if you take a look at the daily, 4-hour daily, doesn't matter. This is a pretty heavy sell-off, and now we're starting to correct it properly. So first of all, we're going to draw some fibs. Voila. And you can see that this was an inverted head and shoulders here. Shoulder, head, shoulder. Neckline was horizontal. The break, the distance targets this 38.2 pretty much. So I think 65.30 is in the cards. So if you see a little bit of a dip and then a turnaround on something like a 15-minute time frame, you wait for a dip and then a moving average crossover, or however you trade. Maybe just buy this 21 EMA around 64.50. And once it starts turning around some kind of level, you go long, obviously, and and that would be the target here, 65.30 by tomorrow. Let's do a little more. We can actually, if we get a more deeper pullback, which is possible, obviously, we can go all the way down here and then go back up. So this is another critical confluence. So horizontal and the trend line support is going to be critical. So that's New Zealand. So all of these dollar pairs are looking pretty much all similar. What else? Bitcoin. Let's take a look at Bitcoin. So Bitcoin hasn't been doing anything, obviously. Like I pointed out on the Sunday's weekly overview video, this is just a chop fest. I would be honestly buying the dip here to target for a little bit of a recovery. But you can also trade the range. You can sell highs here and buy lows here with stops above these highs. So pretty decent risk to reward if we remain in this sideways consolidation, as crypto, specifically Bitcoin, enjoys these powerful non-stop moves and then followed by this chop fest. So I think we're just in the beginning stages of this chop fest. We're gonna probably looking for something like this. So definitely an opportunity to buy the lows here, as the risk in risky assets is probably due for a pullback, maybe a bear market rally or something. We'll see. As you can see, NASDAQ is also can't find its footing, but it's also exhibiting the inverted head and shoulders, shoulder, head, shoulder with a neckline here. So don't buy just yet. Maybe wait for a breakout, a pullback, and continuation. So what you buy is not this breakout. What you buy is here. After the pullback, after the retest, once it starts bouncing and it has a hourly or 30-minute close on a solid candle, that's when you buy and you put your stop below here. That's the play on NASDAQ. What else? Let's take a look at gold. So finally, like I've been saying, the gold took out this channel resistance here. We retested it multiple times and we started bouncing. So this still looks like it has some room to run. And until we break down from this channel, I'm not selling gold, obviously. So if we go all the way down to this channel support and we start bouncing, that's another buy in around 1840 level in gold. So unless we obviously close below this trend line support, then it will change the nature of the situation. Let me actually make it right. Might as well be precise, right? So as you can see, very technically clean from here to here. And daily obviously is still showing this triangle breakdown. If you measure the distance, it targets this support here. So maybe in months to come, we can actually get all the way around 1700, low 1700s. But for now, we took out this uh, channel resistance, and we're bouncing, and we actually went almost to 38.2 of this. If you measure the Fibonacci from here to here, from this leg down, we've corrected 38.2. Maybe I'm thinking maybe we'll go up a little higher to 50% of 618. That would be a ideal sweet spot. Maybe this trend line, red trend line here, around this area, and then we can look for rollovers or otherwise. Also confirmed, this low is confirmed by the bullish divergences. So gold probably has a little more, hopefully has a little more room to run, as I'm long gold and I'm long silver as well. So silver, inverted head and shoulder, shoulder, head, shoulder, and this is the neckline here. We've trying to break above it, and that the target would be around 2330. These previous swing high here. So that's pretty much the quick and dirty overlook of what's happening today. Let's monitor the dollar. Dollar will be showing us the way, and you can play on all the various Forex pairs. And US 30 is having a nice, decent rally as well today. So we just took out this inverted head and shoulders pattern neckline, which was here. So we might go dip a little bit down. Let me actually mark it up. So maybe we'll go back down. You can buy around here for another bounce up. So we on this current leg down, we've retraced already 50%. So maybe we'll go a little higher to this trend line here at 618. So 32, like I said. All right. I hope it helps as always. Enjoy. Oh yeah, the gap. Well, most likely it will be filled, and it can be filled, like I said, tomorrow with Powell speaking. He might be again ultra hawkish, and he that might spook the markets, and it can definitely close below. But for now, close the gap. So that's what I'm thinking regarding the gap open that happened. So we'll see. Again, it can go another day up and then roll over and close that gap on Wednesday or something. And Wednesday, by the way, we have FOMC minutes. So that's another potential market mover information. So depending on what was discussed in the last meeting, obviously they're going to be hawkish, but how hawkish are we talking about? It will be the main point to see. All right, guys. Hope it helps.